Namaskara. Hearty welcome to Jnanarjane, Empowering Excellence. Friends, today's Wednesday study circle, we have very interesting and apt topic for the month, which is currently all of us are busy with the income tax return filing and regular GST compliance. The topic today is practical challenges in income tax and GST compliance and litigation issues. More particularly, it is more of a practical challenges which speaker is going to uh, enlighten us what all the issues people are facing, how it has to solution, what are the solutions, all those issues he is going to discuss. And on behalf of Bangalore branch and on behalf of all the participants here, hearty welcome to CA Mridul Agrawal. Hearty welcome, brother.
Thank you, BT Shetty,
Friends,
sir.
Thank you, Mridul. Once again, hearty welcome. Participants, you are the reason. Every Wednesday, week after week, we conduct very interesting programs and relevant and apt for the month and the week. So, your participation, your overwhelming response, as and when we announce the program, makes us to organize week after week. Hearty welcome to each one of you for today's session on practical challenges in income tax and GST. Friends, there are many other programs also scheduled in this month. I request please visit bangaloricai.org and register for that program. One such program is leadership development. It is mainly meant for young members, maybe even senior members or middle-aged members also can join. That is, leadership is the requirement now. So no more these back office works are vanishing. We need to show our leadership qualities in every area, whether you are doing an audit or compliance or any service. We have to show up our leadership qualities. To train that, to undergo that training, we have arranged a training program of 4 days. So that is commencing on 18th, Friday, Saturday. So I request please visit Bangalore ICI. If it is interesting, please register and also spread this news to your friends and colleagues about this program. So it's a very small group of 15 to 20 members we are going to take. That is the maximum number, and it is going to be a hands-on training from experts. I request please visit bangaloreici.org and register for that program. So once again, hearty welcome to each one of you. Over to Divya.
Chairman, very pleasant good evening to all the participants of today's program and also to our speaker of today's program. To give a very brief introduction about him as a chartered accountant, advocate, and M.Com graduate by qualification. He has worked with BMR Advisors and Deloitte earlier, and currently he runs his own company and firm in Bangalore. He is a teacher and mentor to many students, having taught over 10,000 students across courses like CA, CS, and CMA. He is volunteered with Rotaract earlier as Director of International Relations and has been also a visiting faculty at many colleges. With this very brief introduction, I wholeheartedly welcome you sir, to today's program.
Hearty welcome.
Hearty welcome to you.
Thank you, Bangalore branch of ICAI. I would like to specifically thank BT Shetty sir and Divya ma'am for introducing me and also having invited me over to conduct this study circle meet. To be very honest with you, I can understand that all of you are very busy with year-end deadlines. The income tax return season is in full swing, and all of you are busy trying to meet the 31st December deadline with audits and income tax returns coming in together. So we are going to keep it very brief, and also the topic which has been chosen is a very practical one, and I'm sure many of you will actually relate to what I have to say today, because the topic as such, practical challenges when it comes to income tax and GST compliance and litigation, is something which many chartered accountants continue to face. And the topics that I will be covering today are basically ground level challenges, all right, which is based from my own personal experience and also from what our clients have seen and also from what the industry in general has been facing. So at any point in time, if you have any questions or if there are certain other issues which you would like to add into whatever I have to share today, that would be great. All right. So without any further delays, would like to start off. I'll just share my screen. So I just hope that the screen is visible. Yes. So starting off with the introduction, I think GST, the goods and services tax, was one of the most landmark legislations to be passed since independence. All of us know that. It basically subsumed all major indirect tax laws in the country, like the service tax law, VAT, CST, etc., into one framework, one legal framework. And this year, 2021, we celebrated the 4th anniversary of the GST law on 1st July. Uh, it was envisaged that this would act as a one tax, one nation. It would galvanize the entire business community as such. It would bring in transparency, reduce litigations, lower legal compliances, lead to a much more simplified tax structure. Well, the guesses are out. I'm not sure whether quite a few of those objectives have met, but we are certainly on our way to achieving a few of the objectives. Uh, to say the least, I think the implementation of the GST law was very, very uh, haphazard initially, to such an extent that one of our famous politicians even called it the Gabbar Singh tax, because in the initial years there were a lot of teething problems, especially with the GST website not functioning, there being no clarity about the GST law, interstate disputes, center state disputes, which even continue to this date. Ground level department officers having no clue about the law. So there were a lot of teething problems with the GST law and its implementation per se. But I think the credit should be given where it is due. The government and the department has been really, really proactive, and they have taken some really, really good steps to mitigate the hardships being faced not just by the SSEs on the ground, but the business community as a whole. Uh, Coming to income tax, since my topic is manifold, income tax is one of the major revenue spinners for the government. I think everybody agrees with that, and it's one of the foremost uh, foremost ways in which the government can collect revenue. Passed in 1961, it's a pretty well settled law. Not many contentious issues, barring few issues like the retrospective taxation, which was again sorted out a little later. The implementation and groundworking of the law is also smooth, and the road ahead for the direct taxes code is also pretty smooth. But on the 7th June 2021, the government shot itself in the foot, quite rightly said by many people. They launched a new income tax website, and there began the Pandora's box regarding the implementation. Many teething problems initially, many technical glitches, coupled with the COVID-19 pandemic. The problems continue even to this day. Some of them even question the need for a new income tax website. And many people on the ground, not just the taxpayers, but professionals and also the officers themselves, are pretty clueless on how to use the website. And this is primarily based on my personal interactions with many officers. So let us try to gather some sort of an insight as to what are the main teething problems being faced in not just the litigation aspect but also on the compliance side of things. I think I would like to personally begin with talking about the indirect tax space in the country. Uh, we had various laws prior to 2017: the service tax law, the VAT law, the excise law, central sales tax, customs continue to this day. But there were many laws, and with one stroke, I think they got in GST, and all the laws which I just mentioned were subsumed. But having said that, the issues which were pertaining to the old laws didn't go away. The GST law still had a provision which said that any cases or litigation issues under the previous law would still continue, and they are called as legacy cases. The legacy indirect tax cases continue to this day. For example, many of our clients, not just our clients, I'm sure even your clients, have been receiving plethora of notices from the department, be it from the VAT department, be it or the state GST authorities or the central authorities under whom service tax was there. All of them have been sending notices under the service tax law, under the VAT law, under the excise laws, so on and so forth. It's as if for the past 3-4 years they were sleeping and they have suddenly woken up. It's just an overnight barrage of notices which our clients are facing. One example of notices being served is by the central GST authorities under the service tax law. The department, the service tax department, has been sending notices on the basis of turnover mismatches between the income tax return, the 26AS form, and your service tax returns. It's as simple as that. Apparently, there is greater coordination between the income tax department and the GST department now, and there is free flow of information between them, including the usage of a data analytics software. So what happens is, if you file your income tax return, your turnover gets captured in the income tax return, and consequently you can compare that even with your form 26AS. The same thing becomes an input for the GST department or the earlier service tax department. So they do a comparison, and if you are an SSE who has not taken a service tax registration, or has taken a registration but has shown nil turnover in your service tax returns, then that's a big red flag. And the department simply starts sending you a notice. Now, these notices are being sent left, right, center without any application of mine whatsoever. One example: imagine you are a doctor who runs a clinic. You're a practicing doctor in whatever medical space, or you're an establishment which is trading in goods, or you're a manufacturing entity which is discharging excise duty. You will have a certain turnover in your income tax return, whereas you may have taken a service tax registration or may not have taken one at all. But for the department, they have got this dump of turnover related information from the CBDT, and that's enough for them to send a notice to you. Imagine you're a doctor and they've sent you a notice. You've shown a turnover of around 50 lakh in your returns, in your income tax return, but you do not have a service tax registration. However, please remember, there was no need for you to take a service tax registration, let alone discharge service tax, because you're a doctor. It was completely exempted under the erstwhile service tax law. Similarly, if you are someone who is trading in goods was in the negative list of service tax. They will take the dump from the income tax website. They would have got the turnover. They'll just do a small comparison and say, hey, you're supposed to pay VAT on this. However, or a service tax on this. They want a breakup of transactions, which is completely without application of mine. And it's completely laughable as well, because they actually do not even see the nature of business, the kind of transactions, the detailed income tax return. There is absolutely no comparison being done by the officers on the ground. And there was a big hue and cry being raised by the SSCs and professionals alike, due to which lot of internal circulars were sent out, wherein the commissioner said that the ground level officers have to use their mind before randomly sending notices to clients. What this does is it starts a process. It starts a chain of events which continues for many years to come. One such example was that of a manufacturing entity which was doing job work in our case. Now, under the earlier service tax law, if you are a job worker and if the principal supplier or if the principal manufacturer discharges excise duty, you're not supposed to pay service tax on that. Now, that is a pretty apparent case. However, the service tax department thought otherwise. They first sent out an informal notice asking for documents and records. We submitted all documents and records, and we proved it beyond doubt that here our client was a job worker, wherein the principal manufacturer was paying excise duty on this exact turnover. The service tax officer or the central GST authority wasn't convinced. 3 weeks later, he went on to issue a show cause notice. And now, when we submitted another reply to him, he's saying he'll probably take it up in times to come. Now, what is that time to come is something which we can't guess, because this will, as all of us know, practically these cases go on and on at the ground level, and it takes years to come, just ultimately leading to mental harassment of the SSC. Moving on, this is something which many of you would be used to or would agree with me, and this is something relatively new. The income tax department has come out with a new system called as the annual information system, wherein the department gets information from various sources, from banks, from credit card companies, from your share brokers, etc. And it's basically a collection of all the sources of income that you have. For example, in the earlier years, if you didn't disclose your savings bank interest, now that's practically speaking, many SECs failed to disclose savings bank account interest in their returns, for the simple reason that it does not pop up in their 26AS if it's a small amount, and most of them would have just given it a miss. However, savings account interest gets reflected in the annual information system now, because it's a reporting mechanism by the bank to the income tax department. Now, this is a revolutionary system, because most of the information which should be declared in the income tax return is now being auto-populated, which again goes on to reduce taxpayer harassment and is supposed to ease the burden of the taxpayer by, helping him to do away with a few documents if he wants to. He gets ready access to this in one at the click of a button. However, therein lies the biggest problem. The annual information system has many problems, has many glitches, and the system of information getting populated onto the AIS is again fraught with many glitches. For example, there are many adjustment linked notices that have been received by clients who file their returns on the basis of this AIS. For example, the capital gains. The actual capital gain or the actual cost is actually never considered in the AIS. You only have details. You only I think I'm getting a comment saying my voice is not audible. Is that correct?
Audible, sir?
Audible?
Yeah, audible, sir.
All right. Thank you. So I think, Nagaraj sir, you should, I would request you to check the audio from your end. Now, coming back, I was talking about capital gain transactions. The AIS doesn't capture details of purchase or details of the cost. It only and only captures details of the sale amount of transactions like mutual funds or equity shares for that matter. Now, this information is enough for the department to send you a notice. There is also an instance where there is double reporting of transactions when it comes to, let's say, joint holding of shares and mutual funds. So the same transaction gets reflected twice. In the previous year, there have been cases where even if you're a single holder of a bank account, interest from the same transaction has been added twice. And notices, 143.1 notices have been sent alleging this mismatch between the return filed and what is computed by the department. Similarly, if bare enough, even if the cost is available, the AIS doesn't capture the trend of indexation, and you get a notice for a mismatch. So there are teething problems in the annual information system itself. Over here, what I would advise all of you and all your clients would be to have all documents in place. All sorts of information should be readily available, so that even if a notice does come in at a later point in time, you have all information readily available to substantiate whatever you have stated in your income tax return. But as a conclusion, I would like to say that the annual information system is a really revolutionary way of helping the SSEs out to give them information, because many individuals lose track of especially their investments in shares and mutual funds, and which they actually don't disclose in the returns, but they're actually supposed to. Moving on. This is again something which most of us would be facing, especially with the income tax return season going on in full-fledged and the due dates coming really close. I've highlighted a few of the issues which we have faced for our clients, and also a few of the issues which our fellow professionals would have faced. I'm sure there are other issues which my fellow professionals would have faced, and maybe just maybe it's not put up over here. You're always free to share that information on the chat window. First and foremost, initially when the new income tax website was launched on the 7th of June 2021, everybody was happy. The government was happy. The taxpayers, well, they didn't care. Professionals had a mixed feeling. Infosys was probably the happiest because they got a really big contract. But the professionals were a little skeptical. We thought, hey, what was the need for an entirely new website? The previous website was functioning perfectly. Why was there a need for this change? The government justified it by saying that it made return filing simpler, and it facilitates easier synergy between not just the income tax website but also other reporting by other vendors like the banks or the stockbrokers becomes easier. In my opinion, return filing is pretty much the same, or it's just become a little bit more challenging because lots of glitches even 6 months after its implementation. Few of the problems which I've personally faced are especially downloading ITR forms and ITR acknowledgements for past years, especially let's say 5 or 6 or maybe 7 or 8 years back. Whenever I tried to download the ITR, maybe I didn't have a record, or maybe there was a new client and I needed a record of the ITR or the ITRVs. Given the fact that even service tax notices were coming in, I was unable to download them simply because the portal was not allowing me to download it. Apparently, of late, the portal has started working and it has actually started allowing me to download old or past ITRVs and ITR forms, but technical glitches still remain, and there is that one odd case where I have to try multiple times to download old ITR forms or receipts. In fact, to such an extent, we tried downloading ITR forms, I think 8 years back, for a client of ours who had received a notice. We were unable to do it, due to which we had to file an extension with the department. So yeah, this teething problem still continues to remain in that one odd case. Due dates not updated and penalty gets levied. Like all of you know, the income tax return filing due dates have been extended multiple times. Obviously, due to the new website, the technical glitches, and also due to the COVID-19 pandemic. And all of us are aware that if there is a late, if you file your returns late, there's a 5,000 penalty or a late fee which needs to be paid. Unfortunately, there was just one instance where a fellow professional was trying to file his returns on the portal. The due date being 31st December, the penalty of 5,000 rupees still popped up. Just a week back, the penalty still popped up, and we just told him to use a software for the purpose of filing. So there is a lot of problem with offline schemas not being updated, and the old due dates are still being taken by the department. They have not yet updated it for the latest due dates. Another technical error which some of you may face, I've personally not faced this issue, is that of disk storage space. Technical errors like this prevent SSEs from filing their income tax return. It just pops up, low disk storage space. I still fail to understand how can this issue come up when the income tax department or the enforcers has such big servers at their disposal. Few more issues. Not sure whether you guys have faced it, but if you're an individual SSE making foreign payments and you're supposed to file Form 15 CACB and you don't have a digital signature certificate, you can use Aadhaar OTP or net banking EVC to upload the forms. However, when you try to do this, the OTP does not get generated or the net banking EVC does not come in, due to which you have to submit manual 15 CACB forms to the bank, and the bank itself creates a big ruckus behind this. So the payments get delayed, and there are other outstanding issues which happen due to this. If the functionality is there, I think you should allow it. But then this technical issue really makes things really difficult for the SSE. This personally happened with me just 4 days back. Maybe on some of your systems it may have worked, but we tried doing it in quite a lot of our systems, didn't work out. We had to end up submitting manual 15 CACBs to the bank. We literally pleaded on our knees with the bank to accept it and then process the payment. Finally went through, but then something for the department to ponder about. Another issue might be that of pre-filled ITR data. Earlier you could file pre-filled ITR 1 forms especially, and the data would pretty much be accurate. However, once the new website has been launched, the pre-filled data is fraught with a lot of errors, and it's fraught with risk basically. So if you're someone who's trying to file returns online based on this pre-filled ITR data, my suggestion would be not to do it blindly. Please do a double check, thoroughly check all the records and information of your clients, and then do the filing. Another technical glitch when it comes is using the JSON utility or the offline utility made available by the department, especially for filing tax audit reports. Firstly, the utilities were made available quite late, and filing of reports requires multiple attempts. A case in point being when I tried filing a 3 CACD report just very recently using this offline utility, because for some reason my softwares weren't working. We tried filing it. We tried doing it twice. Initially, never worked. The income tax portal kept throwing a lot of errors. But then again, we had to again refill. We had to download the utility again, fill it again. Even if you had an XML from the old utility and you try to open it in the new one, doesn't work. You have to refill the entire thing again, generate the XML once more, and then upload it on the portal. Then it got filed. This leads to precious man hours being lost, especially when the pressure of multiple due dates are there on our heads. Then again, a few other issues which you may have personally faced is problem in downloading notices under section 143(1). the intimations which you get after you file the returns. Mail notices being sent, yes, for old years or maybe even in the past, but when you actually go to the website, the income tax portal, and try to download the notices, you just can't. Just errors keep popping up saying not available, or the income tax gets timed out for whatever reason. Sometimes the SSE may have just lost track of the email. He may not be able to find it in his mailbox. So how do you end up finding the notice copy? This happened again in the case of one of our clients, wherein it was for a prior year. The client had lost track of the email received. So we logged in, tried to check the notice, tried to download it, but nope, didn't work at all. Huge problem. Again, SSE is not able to download any of the forms. They're not able to access their old records. I'm sure quite a few of them have been sorted out with time, but few technical glitches here and there keep popping up. And probably one such issue which I have personally faced is the speed of the e-filing portal. I'm not sure whether all of you have faced it, but few cases wherein either we have not been able to generate the JSON files or we have not been able to upload the JSON file for whatever reason. I'm assuming that's because of the speed of uploading, the returns, filing of replies, submissions become really, really slow at times. It's not the fault of the internet. It's not the fault of the forms which you use or the softwares you use, but simply the problem of the e-filing portal itself. So honestly, government is making a lot of efforts at speeding up things, at getting rid of the technical glitches, but the problems still remain and government still needs to do a lot more. Now it's just a question of, when the due dates will get extended again for many, many professionals like us. I'm sure many of you may be facing some other issues which may not have been listed over here. Please do feel free to share them. Apparently, Sunil Kumar sir says the IT return is now a 40-page return with just salary and capital gains and dividend on shares. Really, really laughable. The next teething problem which we have personally faced is this extended period of limitation under the service tax law. If you remember, under the erstwhile service tax law, show cause notices had a period of just 18 months. But if the department alleged fraud or willful misstatement or misrepresentation, then the period got extended to 5 years. So technically meaning they could send you a show cause notice over a period of 5 years' time. Now, to be very honest with you, this is blatant harassment by the officers. This is gross misuse of power. What happens is that, let's take for example, financial year 16-17. The 5-year time limit gets over in 2021, few months shy of 2021. Now, you have just 2 weeks, you have just 2 to 3 weeks remaining for the period of the extended period of limitation to get over. And you have the ground level officers sending you a show cause notice, alleging fraud or willful misstatement, and you just have a couple of weeks to go. Why couldn't they wake up probably a year or 2 back? Well, that's a question I have no answers for. All of us know how the departments usually work, but they just use this extended period of limitation of 5 years, left, right, center. There's absolutely no application of mine, and they send you the notice. And when you actually reply, they say we are busy with other cases. We are dealing with cases for a prior year. So we'll call you when we actually take it up. Now, when will they take it up is anyone's guess. Sometimes these cases drag on for months together. So again, undue harassment of the SSE and something for the department to ponder about very, very seriously. One issue which I personally feel is one of the biggest challenges from a compliance perspective under the GST law is this facility of revision of returns. All of us are aware that we have, for a normal SSC, there are two returns which needs to be filed, the GSTR1 and the GSTR3B. And for specific cases, you have other kinds of returns. I'm not getting into that. But one of the biggest complaints which many SSCs have against the GST department is this facility of non-revision. And I think this is a genuine concern. If you remember, or if you have actually practiced the service tax law or the VAT law or the excise laws, you had this facility of revision of returns, which means if the SSC made any mistake or any error, inadvertent or advertently, they could revise the returns and rectify them. But under the GST law, there is no such provision. Once you have filed it, it's done, it's over. Even simple errors, clerical errors, can go a long way in making your life miserable. For example, adding an extra zero. If your turnover is, let's say, 1 crore 40 lakh, you add an extra zero at the end, it becomes 14 crores, and you just hit the submit button. There is no option for you to go back and rectify those mistakes, which again will lead to a cascading effect in the future, because when the GST department actually takes up your case, they're going to question you 1,000 times as to why there is a big mismatch. So I personally feel that this functionality of revising the returns must definitely be made available, because ground level officers just need a reason to harass you, and they will go to any length to even find out a simple mistake to harass you. I'm sure many of you are facing issues with respect to GST returns not being revised, so on and so forth. Now, this is one case which I personally dealt with, and that's a notice which was issued for mismatch between GSTR 2A and 3B. For the people who do not know what a GSTR 2A is, a GSTR 2A is nothing but an auto-populated pool of all the input tax credits under the GST regime. My voice is breaking. Maybe just a little bit of a network issue, I guess. I hope it's all right now. Coming back to the topic at hand. GSTR 2A, like I was saying, is a pool, is a auto-populated pool of all credits, input tax credits, which an SSC is eligible to take. So for example, if you have purchased certain commodities or certain raw materials, or you have taken certain input services, your supplier is supposed to file his GSTR1. Now, when he files his GSTR1, whatever details he has keyed in there, based on your GST number, that credit will come and sit in your GSTR 2A, which you can use to compare the credits which you have actually availed in your monthly 3B returns. Now, for all the people who actually have practical experience in filing the returns, currently there is a system wherein you're supposed to verify your credits with your GSTR 2B and your 2A also. And there is a specific rule which states that your credits in GSTR 3B cannot exceed 105% of the credits available in 2A. Earlier, I think in 2019, it was 120% of the credits available in 2A, which means, to give you an example, if the total credits available in GSTR 2A is, let's say, 100 rupees, all right, or let's say 120. your 3B cannot exceed 100 or 120. It should be up to 120. You cannot take beyond that limit. Subsequently, it was reduced to 105% of whatever is available in your 2A. And slowly, the idea is that your 2A and your 3B should match completely. There shouldn't be any sort of a difference at all, because technically, whatever you purchase, you will have invoices for that, and that should technically be available on the GSTR 2A pool. However, this rule wasn't there initially when GST was launched. 2017-18, 18-19, this rule was not there. It came in only subsequently. However, the GST department thinks otherwise, and they have started actually sending notices on the basis of a mismatch between your 2A and 3B for years like 2017-18 and 18-19. I can give you a personal example. There was a client for which there was a GST audit, and during the audit, the GST department people were verifying the 3B and the credits, and they were verifying that with the 2A. So the 2A, the monthly 2A, which they had actually extracted, was from an internal departmental software called as GST Prime. For those of you who actively deal with litigation, you will know what I'm talking about. They had this data extracted from their own internal portal, and based on that, they did a calculation and they arrived at a particular number, that this is the total credit available at the end of the year as per the 2A. And as per our 3B, the credits were much higher. So if the credit as per their data is 100, we had taken, let's assume, 150. And they said that this differential 50 rupees has to be reversed, and we have to pay that in cash along with applicable interest and penalty. Now, however, this entire audit happened just a few months back, let's say 8 or 9 months back, in the month of January or February. We showed them, we relied on our GSTR 9. Now in GSTR 9, there's a column, I am not sure of the table number, I think 4A, wherein you get the data of total credits as per your 2A. Now the credit available in GSTR 9 in that particular table for us was actually 200. Whereas as per 3B, we had taken just 150. And the department is saying as per 2A, it's only 100. So we have two sets of data here. One as per GSTR 9, one as per the internal departmental software which they have used, which is 100, and there's a mismatch between that. So which data set to rely on? The department completely negated our argument, saying that the data available in GSTR 9 is ridiculous. We cannot consider that. Our data from our software is supreme, is prime, and pun intended, and you have to pay tax on that, to such an extent that we have gone on appeal against that order being passed. So as of now, the matter is still pending adjudication, or rather at the appellate stage now. The biggest problem with the department is their technical glitches. The software is being used by them. Not sure how the data flows for them. But in this particular instance, what we told them was, hey, firstly, that table in GSTR 9 is auto-populated, and we cannot edit that. There is no scope for the SSE to edit that. So that's an auto-populated field. We showed them the handbook issued by the government, by ICAI, etc., and clearly showed them that this was an auto-populated field. Secondly, we even told them that there was no facility for matching 3B credits with 2A. There was no limit whatsoever. So the argument which they were using was pretty ludicrous. And they were hell-bent on trying to prove that their data set was pretty correct, whereas that was not the case. And problem with us was we didn't have adequate data sets to reconcile, because as you know, 2A is a real-time, it gets updated on a real-time basis. So that's one of the reasons why we took a very, very aggressive stand on this, and they ended up, passing an adverse order. So one such practical issue in GST is matching of 2A versus 3B. So if you guys are in such a case, or if your clients face an issue like this, our suggestion would be to have month-on-month reconciliation between your 2A and 3B, not just with your 2B, but also 2A versus your 3B, and ensure that your vendors who haven't actually uploaded their bills on time, you actually penalize them or withhold their money until they actually upload their bills on time, because that is going to lead to a lot of problems later on. Maybe not now, but later it definitely will. One such practical issue under the GST regime. The next one, I think more or less this has been sorted out, but issues regarding Tran 1. This is something which I've personally dealt with, and one big issue which happens in this particular form. Now, for those of you who don't know, Tran 1 was a form which was used to transition credits under the old regimes of excise duty, VAT, and service tax to the GST regime, obviously well within the confines of the transition rules. All right, so let's say you're a trading business and you had excess VAT input credit of, let's say, 1 lakh rupees. You could have actually transitioned that to the GST regime by filing the Tran 1 form. The same logic goes for the service tax or the excise duty regime. Now, there was a very stringent timeline for filing the Tran 1. However, many SSEs weren't able to file the Tran 1 form within the given timeline earlier because of either technical issues or because of no knowledge or confusing transitional rules. There was a lot of problem being faced by taxpayers, and this was further compounded by the adamant attitude of the GST department. The GST department just stood its ground and said, we will not extend the deadline for filing the Tran 1. However, the SSEs went to the court of laws, and subsequent judgments later, the time limit for filing the Tran 1 was extended. So some relief there, but now at the ground level, many SSEs have started receiving notices from the department having to justify the Tran 1 credits. Now, the problem with having to, if it's a pretty straightforward case, I don't think you will have anything to worry about. You just have to show your service tax return, which you filed in the month of June 2017. That's it. But if there are complex calculations involved, then you will actually have to dig deep. Go back to your past records, make a reconciliation statement again, and then give that to the ground level officers. Because as a matter of fact, the ground level officers also have very little clue about the provisions of the law, the transitional provisions, how the Tran 1 form worked, so on and so forth. So you have to do a lot of explanation to these ground level officers. So it is a really tiresome exercise to provide all those historical data once again. Do we actually focus on current year problems, or do we continue addressing old legacy issues? Again, like I said earlier, most of the demands by the officers are pretty unreasonable. Moving on, well, this is something which may have become a non-issue now, but I'm sure few of you may have faced this issue. The percentage of people actually facing this issue is very small. But I thought I'll probably address this issue over here. The GST department, or the GST law apparently has a provision wherein if you do not file your returns for, let's say, 6 months, the GST registration gets cancelled. All right. And if you again want to reopen or get that registration unblocked again, you need to pay the applicable taxes to the department with interest and penalty wherever applicable. However, the biggest problem lies in the adamant attitude of the department. Once you have not filed your returns for, let's say, a period of 6 months, the department ends up blocking your portal, the login on the GST portal. And you have no access to either your returns, you have no access to any other data on the portal. And they tell you, hey, you have to pay. Question is, how do you pay if the portal is not open at all? Now, that's one big issue which many SSEs have fought tooth and nail. Personally, I have not faced an issue like this, but if you have, then I'm sure you will echo the sentiment that I'm talking about right now. They cancel the GST registration, block the system, don't even unblock it, even if you're willing to pay the interest along with applicable penalties. How is the SSE supposed to do that? So over here, a cooperative attitude on the part of the department or the ground level officers is definitely required. The department really needs to handhold the SSEs, be a little more empathetic and give them the benefit of doubt. Endorsement from your jurisdictional SEZ officer. Well, GST refunds is a big major issue for many taxpayers. To be very honest, export transactions have been the primary focus of many governments. In fact, for any country, I think export transactions is one of the biggest money spinners in the form of precious foreign exchange. And to incentivize people to make more and more exports, the governments have come out with many beneficial schemes. It can be the MEIS scripts, the SEIS scripts under the customs law, subsidies under the state laws, subsidized electricity, etc. Many benefits under the service tax law, many benefits under the GST law, so on and so forth. One of the biggest benefits of being an exporter is not having to pay any taxes. And that actually should be the way ahead, because there's a popular saying, you export your goods, you export your services, but you do not export your taxes. Given the fact that supplies, exports or deemed exports must be really competitive, the indirect tax laws had many benefits, not just under the GST regime, but also under the erstwhile service tax regime. And that benefit was that of refund. Now, refund could be claimed in many ways. Either you export by payment of taxes and you can claim a refund of those, or you can claim a refund of the taxes which you have paid on your inputs and input services. These are two of the most popular ways in which a refund can be claimed. Now, this particular issue that I'm going to be dealing with is when you are actually making a supply to SEZ units, a special economic zone unit. Now, as most of you know, that supplies to SEZ unit can either be done on full payment of taxes or without payment of taxes under the cover of a letter of undertaking. Now, the biggest challenge here is to claim a refund. So SEZ unit, like you know, is set up by the government of India, wherein if you're a SEZ unit and you're a unit in an SEZ zone, you basically deal in exports and you get a whole host of benefits from the government in the form of reduced taxes, reduced stamp duties, single window clearance, indirect tax benefits, direct tax exemptions, so on and so forth. But let's assume that you have supplied. I'm a domestic supplier. I manufacture or I sell certain goods or services to an SEZ unit. Now, supplies to an SEZ unit can be done under the cover of an LUT, and I don't have to basically charge the SEZ unit any taxes. I can, but many people choose not to. So what happens then? You supply goods or services to an SEZ unit under the cover of a letter of undertaking. And then whatever you have purchased or whatever inputs you have used to supply the output services or goods, will attract a tax. Obviously, I've purchased something. My vendor is going to charge me full GST. I cannot claim an exemption on that. Now, don't you think this GST is going to be a cost for me because I have inputs, but when I have no outputs, how do I set it off? So the concept of GST refund comes into play over here. And what I have to do basically is do a calculation, collate all the required documents, submit that to the GST department. They are going to process it, they're going to see it in detail, and then sanction the GST refund, whatever is applicable. Now, apparently, for those of you who have dealt with this kind of a peculiar case, is the requirement of one document, which is an endorsement from the jurisdictional SEZ officer. So apparently the SEZ unit to which I have supplied my goods has to give me this endorsement from his jurisdictional SEZ officer, which states that I've actually supplied goods or services to him, and he has verified the contents of that. So he gives you an endorsement on the invoices. Now you need to submit as a supplier to the SEZ unit. You're supposed to obtain this from the SEZ unit and give it to your jurisdictional GST officer. And this is apparently a mandatory requirement, and without which the refund is not going to get processed. Sounds simple? What's there? Just getting a document? I think the biggest challenge lies in getting that endorsement itself. There have been numerous cases which we have personally faced, and in all those cases, one document which was not available was this endorsement from the SEZ officer. We literally begged the SEZ officer. We went on behalf of that SEZ unit to the jurisdictional SEZ officer, requested him with folded hands, begged on our knees, give us this. There's the crores of refund which is pending, but no, that SEZ officer didn't budge at all, due to which our refund claims were outrightly rejected. So honestly speaking, in my personal opinion, there is a requirement for either making this a not so mandatory requirement or coming up with certain other steps in which the need for this document is negated. I personally feel that SEZ officers should be much more empathetic towards SSEs and taxpayers. And then again, there are other tax planning strategies which we had to use to get a refund for this, but that's probably a story for another time. Next one. I think the next biggest challenge which many SSEs face is the inverted duty structure in GST. Now, what is an inverted duty structure? It's when my inputs attract a higher levy of GST, but my outputs have a lower GST rate. For example, let's say I'm into supply of ready-made garments. So let's assume my ready-made garment, my output ready-made garment has a GST rate of 5%, but my inputs, the raw materials which I use, attract a 12% GST rate inputs, right? That's called as an inverted duty structure. I'll be paying output at 5%, but my inputs will get taxed at 12%. So what you see over here is a mismatch between my output and my input, and due to which my credits, my input tax credits, keep ballooning up. So what do you do? What do you do when you have a scenario like this and your credits keep ballooning up? Simple. Apply for a GST refund. The GST law has come out with a provision where you can actually, apply for a GST refund. Obviously, because this excess credit is nothing but blockage of working capital, and especially for MSME units, the micro, small, and medium enterprises, uh, which have many teething issues, especially in COVID time. Cash flows are very slow, very low. Their customers are closing businesses, running away, and they are just delaying payment. These guys need that working capital. And when your GST input is blocked as credits, that's a huge chunk of working capital for which they don't get any interest at all. Imagine if I'd invested that same amount of money in a bank deposit or just kept it in my savings account, I could have earned some amount of interest. But here, there's absolutely no interest whatsoever. So the department basically, uh, came out with a rule. I mean, there's a rule in the GST law wherein you can apply for a refund under Rule 85, Sub Rule 5, in case of an inverted duty structure. But again, there is a big, big issue in this, and that's departmental amnesia, departmental arrogance, or harassment, whatever you may like to call it. Because, firstly, GST refund on the inverted duty structure is restricted to just goods and not to services. I'll come to that topic a little later. When it comes to input goods, obviously, I just gave you an example of ready-made garments. There are other cases also wherein you have the inputs taxed at a much higher rate, but the output is taxed at a much lower rate. Now the department is very, very skeptical about issuing refunds in such cases. They will go into so much detail, it just amounts to undue harassment of the SSE. They'll ask you for such unrelated documents, and they'll just make you run around to such an extent that you will get frustrated. And at the end of it, there have been many cases where they have just rejected the refund outright, which again is the biggest injustice which the department can do to suppliers of such kind of goods. And again, the biggest injustice lies in the fact that inverted duty structure refund does not apply to input services. So most input services, I'm saying most, attract a levy of 18%. You might use input services to supply your output, which may be taxed at just 5%, but you cannot claim a refund on input services if it is on account of inverted duty structure, which by default is the biggest injustice, because most services attract a 18% levy. However, in my opinion, there have been favorable judgments in this case, but how much time it takes to percolate down to the lowest levels of the department is something which all of us must think about. Next, another issue, and I think GST refunds is something of a big issue which many SSEs face in today's day and age. And quite frankly, when the focus is on export of goods and services, obviously it's a money spinner for the government, right? So GST refunds have to be very robust. They have to be very quick, and it shouldn't be fraught with too much of paperwork and too much of harassment. One such teething problem in the GST law pertaining to GST refunds is the time limit. And I'm sure many of you would have observed this and maybe would have laughed given what is there in the law and given what is happening practically. Well, as per the GST law, once you file a refund application, the GST officer is supposed to give you an acknowledgement within 15 days of filing the application. And if he's satisfied with all the documents having been submitted, he's required to pass an order within 60 days of the application being filed. So 60 days of the application being filed, a refund order is supposed to be passed. Now, practically tell me, does that even happen? I don't think so. At least the GST refunds that we have personally worked with, we have never got a refund order within 60 days. It's dragged on for months and months together. We don't get an acknowledgement online also. So whatever is stated in the law regarding the acknowledgement being made available in 15 days time, the order being issued in 60 days is just mere talk. It's only in theory. And also there is talk of GST refunds being a completely online process. Now, how many of us have actually got our GST refunds without making even a single visit to the department? At least I haven't. Most of the refunds that have been sanctioned for our set of clients, we have had to make at least one minimum visit to the department. I think one odd case could be where you have excess cash balance being in your cash ledger. Maybe in that particular case, since there is nothing much to actually uh, there's nothing much to think about. Maybe just maybe you don't have a requirement to go to the department, but in that case you would have got a refund without a physical visit. But in most of the cases that we have personally handled, we have had to make a visit to the department. Maybe the case is different in different places. Maybe in your case you wouldn't have had to go to the department, but in majority of the cases that requirement still exists, which again is a big ironic factor. But again, I'm sure this 15 days and 60 days time limit in most of the cases is there only in theory. Practically speaking, these timelines are usually not adhered to. Secondly, just imagine a case where you have actually submitted a refund claim and maybe some documents are actually not there or they are not in order. The officer is actually supposed to issue something called as a deficiency memo, which clearly states that, hey, there's a deficiency in the documents which you have submitted. Please rectify those defects. And most of it is supposed to be done online. Now, outrightly, maybe there's no time limit in the law, but if you read the circulars and make an interpretation, there's actually a time limit of 15 days within which you are supposed to give a deficiency memo. But is there actually practical implementation of that towards that effect? I don't think so. The officers they take their own sweet time to issue the deficiency memo to in many cases. Now, the biggest problem, especially with GST refunds, is the time of passing the order. You're supposed to pass an order within 60 days as per law. But getting an order within 60 days is a big challenge in itself, wherein most of the times, I'm saying most and not all, most of the times, the GST refunds are sanctioned many months later. Some cases it's been 5 months, 6 months, maybe even a year, or maybe even more than a year. I'm not sure I'm talking about pre-COVID era and not the COVID time. The COVID pandemic season could be a genuine reason for that, but frankly, pre-COVID also, there were many cases where it took many months, way beyond the mandated 60-day time limit for the GST department to issue these refunds. So over here, this causes a lot of stress, a lot of trouble to the SSEs, because there's not just undue harassment of having to submit documents, but there is also blocking of working capital, which is the biggest disincentive for anybody who is doing business, especially if you're in the export transactions and your credit terms are not so favorable. So the department keeps conducting these special drives. I think, if I'm not wrong, just few months back, the GST department had this special drive wherein any refund application which was pending for over a month was sped up with and the refunds were issued. Well, you're not supposed to organize these special drives. You're supposed to have a much more robust mechanism of clearing these refund applications within time itself. But sadly, that doesn't happen most of the times. In fact, you can't blame the GST level officers also, because if you were to be empathetic with them, they are short staffed and they have a huge amount of cases pending on their heads. And to be fair to them, I think the department or the GST department itself has to do a lot of soul searching regarding this. Again, confusion over manual or online system for refunds. Apparently, as per law, most of the refund processes are supposed to be online. And if the department issues you a deficiency memo, it's supposed to be online. Usually, that's the law. But in most cases, I'm not saying all, in most cases, again, this system of online submission is again done away with, not from the SSE side, but from the side of the GST department itself. Majority of the times, when a deficiency memo is issued, it is usually a manual form. Mostly it is a manual letter, which is either sent by registered post or it is sent to the email ID of the taxpayer seeking multiple clarifications, and you keep getting reminders for replying to the deficiency memo. Similarly, the SSE has to make multiple visits to the department to get their refund claim sanctioned, including for submitting basic documents. Now, is this manual approach in line with the spirit of the law? Well, definitely not. Because when GST was launched, the idea was to leverage the digital system, the website, and the digital systems in place. It was in line with the Digital India initiative of this government. And everything was supposed to be online. But the stakeholders, the most important stakeholders of this system itself, that is the department itself, does not adhere to that very spirit. Yes, I do agree that initially, when the GST system was launched, the portal was not working properly. There were loads of technical glitches, due to which the department itself started accepting manual applications. So it was as similar as filing a refund application under the service tax law. And you had a rerun of the service tax system under the GST regime. But I think 4.5 years down the line, you really need to get rid of the manual system. But then again, when that will happen, when they will get rid of that system completely, is anyone's guess. But for the time being, I guess this sort of manual come online system is definitely here to stay. And we can't do much about it except hope against hope that this is sorted out very soon. And yes, I am getting a comment saying this denial of refund application on ground of time bar. It discriminates against Article 14 and intention of law is not to exports. Well, definitely it is discriminatory, sir, on many grounds. I completely echo your sentiments, but then again, there is nothing much which is changing on the ground. Even if the courts do pass strictures against the GST department, how much of it actually gets implemented on the ground? That is again something for the department to ponder about. Moving on. Yes, supporting documents, and I'm probably nearing the end. Supporting documents and their necessity in GST refund. Some of you may not have faced this issue in your cases, but there were certainly a few cases where I personally dealt with it, and there was a requirement for a few of these documents which we had to give. So hence the need to have this over here. Supporting documents which we had to submit. For example, the simplest refund claim which probably any SSC can deal with is excess balance lying in your cash ledger, right? So if excess balance is there in your cash ledger, just file an application online and you get the refund. Well, more recently, there have been cases where the refund has been automatically sanctioned. I'm sure it's happened in your cases too. But there was once a time where the officer actually called me up and asked me to submit a certificate by a chartered accountant certifying what is the balance in the cash ledger. Now, this was a completely laughable requirement. Why do I say laughable? It's simply because cash ledger is there on your portal. It's electronically available. The officer just can type in the GST number of the SSC, can go and verify the details. Why do you need a chartered accountant to certify that? But no, there was this officer who was really, really adamant about it. And he said, if you don't give me this document, I will not sanction your refund claim. And trust me, there was actually, what happened was the client had actually inadvertently deposited excess cash in the cash ledger, and it was just lying there, and he was in genuine need of cash due to some working capital issues. So he said, why don't you apply for a refund? So in my opinion, again, this was supposed to be sanctioned automatically, but that didn't happen. I receive a call from the officer, and the officer says, please give me this document. Now, we had a long argument with the officer as to why it's required, why not, why should we give it, etc. But then again, we realized that there's no point in arguing with the officer. We just have to give it. Ended up giving a certificate by a chartered accountant certifying how much was the balance in the cash ledger. Another case of a refund claim was where, the officer was asking for another certificate from a chartered accountant certifying that the incidence of tax has not been passed on to the other party. And this was a case where, it was a refund of excess balance lying in my cash ledger again. In this case, this requirement lacks logic, lacks rationale, complete legal rationale. Because excess cash lying in my cash ledger balance and the incidence of tax not having been passed on to some other party is nowhere related. It's completely unrelated. I do remember that under the service tax law, under the service tax regime, when you were claiming a refund of taxes, there was a requirement to submit this certificate wherein you certify that no incidence of tax has been passed on to the third party. That requirement was there under the service tax law, but under the GST law, especially in a case of refund of excess balance lying in your cash ledger, no such requirement is there. However, the department continues to insist for this document, which again, like I've said time and again, defies logic, not just normal logic, but also legal logic, and is completely ridiculous. Then again, you have certain other cases where the GSTR 2A is required to be uploaded onto the website when you're filing a refund claim. Again, GSTR 2A is an automated report. It's a real-time report which keeps getting auto-populated. In fact, the GST department themselves can have a look at the GSTR 2A. They can themselves download it. Well, the requirement to submit GSTR 2A, again, along with the refund application, in my opinion, is not very, very reasonable. Along with having to upload the GSTR 2A, there is another requirement wherein, those invoices which are not available, the invoices which are not reflecting in the GSTR 2A, you're supposed to submit self-certified copies of those invoices. And on the basis of those self-certified copies of invoices, they would have issued the refund. Obviously, times have changed, and the department has now issued a clarification wherein only those invoices which are reflecting in your GSTR 2A, you will be getting the credits, which is frankly in line with the other rules of 105% and 120% of 2A credits and all of those rules. But there is still a requirement of having to submit those self-certified invoices in certain cases, just to show and prove to the officer the amount of credits that I've taken in my 3B. He just needs to know how much credit I've taken in my 3B, which again, in my personal opinion, is a ridiculous requirement. Maybe you guys may not have faced it, but there were a few cases few months back when we actually had to upload these self-certified invoice copies, which was a huge manual task. The easiest way for us was to download the 2A, upload it, prepare a reconciliation statement between the invoices there in our 2A and between the invoices in our 3B or in our GST workings, submit that to the officer, show him the invoice copies wherever required. He'll verify that and sanction the refund. But we still had to go ahead and submit all invoice copies, upload them onto the portal, which frankly is double work when it's anyway appearing in my GSTR 2A and I'm giving you a reconciliation statement. Is there really, really a genuine need for me to upload all the invoices once more? So again, these were a few cases. These were a few cases which we have personally dealt with in the case of our clients, wherein we are supposed to upload all of these documents. You may have had to deal with a different set of officers in your jurisdiction, in your city, no doubt about that. And the documentary requirements may have been different as well. But I think a general sentiment is that the refund process is not as easy, is not as straightforward as it is made out to be. All right. And there is genuinely a need to simplify that process. I think this was pretty much what I had to offer for the day, keeping in mind the busy schedules which all of you have, and also the kind of challenges which we have personally come across in our field. So I'm sure you as a professional, as a practicing professional, would have faced many other different kinds of issues. So please feel free to share them if you want to. And if there are any questions, do feel free to go ahead. That I would like to thank you.
Mridul, there are few questions in chat box.
All right,
Please
sir.
go through the chat box and Q&A also.
I will address them. I think in the chat box, I can see Sunil Kumar sir had asked, IT return page is now a 40-page return with just salary and capital gains and dividend on shares. Definitely, sir. I completely echo that sentiment. Why is a 40-page return required? I think you should actually have a return form which is, curated to your needs. If there are genuinely some fields which are not applicable to you, that should be done away with. I mean, the income tax department website should itself have a functionality where it weeds out those segments where you actually do not have any entry. But unfortunately, that's not the case, which leads to ballooning of returns and having to take printouts to give it to the bank and many other places. PT says I have done for 2 of my clients, which have been automatic. Yes, like I said, many jurisdictional GST officers do sanction refunds without having to make a physical visit. No doubt about that. In fact, of late, we have also had cases where we have not had to actually visit the department, but practically speaking, majority of the cases do require at least one visit to the department. And I think, Sandeep sir, I've answered your question already. Does it not discriminate the intention of the law, which is again, to export without taxes? Yes, I think I completely agree with you. I've addressed that point. I think I've addressed most of the questions in the chat window.
Okay.
Is there anything else? I don't see anything in the Q&A window, sir.
Yeah, no questions in Q&A. That's all, I think. We had a fabulous session. Thank you very much, Mridul. So I'm sure all the participants enriched from this session. A lot of issues you discussed. So on behalf of Bangalore branch and on behalf of all the participants here, our wholehearted thanks to CA Mridul Agrawal. Thank you very much, Mridul.
Thank you, sir.
Participants, you are the reason for this program. Thank you very much your participation and active participation. In fact, thank you very much. Please visit bangaloricai.org for all upcoming programs. Thank you very much. Good night.